Hey traders, TG Watkins here. Now, I know we all have our own proprietary indicators out there for professional traders. I've got the Moxie Indicator, but for the rest of us, I want to make sure that those of you who are trying to get started or trying to kind of fill out your trading apparatus and make sure that you have some good tools to use, I do use free tools, and I want to make sure that you guys know about these free tools because they are important. They are crucial to how I trade. I do use them. They're extensively used for me, and I find them to be very, very important. In fact, the number one free indicator that I use is the Keltner channel. I refer to it as the third ATR. But I want you guys to know about this stuff because these are tools that if you don't already use them, you can incorporate them into your trading for free. And I think you'll find them very, very beneficial to your trading style. I found all kind of stuff to use them with, and I'm going to go through here and show you how I use them, how I incorporate them into my trading plan, my trading methodology, and some real trades. I'll show you some actual trades that we did, plus some of the ways that the squeezed helped me make 2,000% on my SOXL trade that I closed just a few weeks ago. So let me get into this. Also remember, if you guys are interested, coming over to the Moxie Indicator Mastery, that is my trading room. We have trials for 30 days if you guys are interested coming into that. And we're always running some specials or promotions, so if you guys have any questions, reach out to the customer support team. All right, so let's dive into this. Now, the first one we're going to be looking at, let me come over here and get the screenshot up here, is going to be the Keltner channel, and this is what I call the third ATR. Basically, the reason I call that is because if you look here, this is the setup for Thinkorswim. It is going to be based off of the factor here, which is 3, so that's how I get the third ATR, and it's going to be based off of the 21 simple moving average, just so you guys get that all figured out. And after that, it's just a matter of customization about how you like the colors and if you like the center line or anything else like that. What this tells me, and again, here's the setup if you guys want this, you can translate that to any of the other platforms that you might trade on. So what this tells me, it gives me a really good understanding of when price is overbought or oversold or at some sort of extreme. Now, of course, nothing is perfect and nothing is always in the market, and so you have to understand that this is a most time and it's a good guideline and good boundaries. The way I kind of look at this is, it's like if you're driving down the freeway, you've got the barriers on each side of the freeway, but there's a lot of room to move inside of that freeway, isn't there, on both lanes, on both sides. And this is kind of those outer boundaries. So look at Robin Hood for a moment, and this works for the upside and to the downside. The third ATR are these dotted lines. Here you can see them kind of a I don't know, turquoise color, and it's on the upside, and then you can see it here, it's on the upside and the downside. And so what it does is that price really doesn't like to stay outside of them for too long. And you can see oftentimes it will come right to it. You can see right there, third ATR, and what did it do? Turned around. How about this time? Third ATR, turned around. And it works to the upside too. And you can see here on earnings, price gapped up outside of the third ATR and then came back down. Now, of course, as I said, not everything is perfect, and sometimes it can get out of and stay outside of the third ATR. And you can see that here when moves are really extreme, whether to the upside or to the downside. Just understand these are guidelines, and it's to help tell you when price is a little too far in one direction or another, and that maybe it's not the best place to either buy or sell in that location. So, for example, if we kind of zoom in on this one, the couple of other examples I just showed you were pretty obvious, but let's just say right here, you got a price coming way outside of the third ATR. Is this a spot right there that you want to buy? No, probably not. You could probably do a little bit better. And if you look, you can see here, price comes in just a little bit, or even here comes in just a little bit. And if you're trading options, that would at least help you, because then you're not buying when volatility and premiums are really, really up. You can actually get just a little bit of a pullback, and that'll help you with your option price. Same kind of deal like up here. You don't really want to be chasing up here, because look what happened. Price started to come back into the moving averages. So that you can use these for kind of bigger turns, or you can use these for little smaller things to help figure out exactly where you should be getting into them. And this works on all time frames. If you're going to be a day trader, this works on day trading. If you want to be using lower time frames, hey, it even works on the monthly and weekly. Just understand that it's going to be on a larger time frame. It's going to be a little bit slower to respond. And as I said, you can look in here on the hourly chart, even in through here in these little moves up like this. You can see here how price kind of got outside of the third ATR. What did it do? Pulled back. And yes, up here it ran outside of the third ATR for a while, but eventually it pulled back. And that's really the biggest thing that I'm trying to show you guys, is that it just doesn't like to really stay outside of the third ATR for so long. And so it helps kind of give you that outer boundary, whether it's to the upside or to the downside, that if price is there, either number one, maybe you should take profits if it's in the direction that you wanted it to go, or number two, if you're trying to get in, maybe you should wait just a little bit and see if you can get a better entry. And as I said, even on the extreme situations, look at this one. Now this looks like it was kind of leading up into earnings. Yes, look how crazy, look how far outside of the third ATR that thing went. As I said, it's not that they're impermeable, it's the fact that they don't like to be outside of those 30 TRs for too long. And you can see here, it got way outside, and what did it do? It started to come right back in. So let's just say you were short. If you were short and you got this correct, great, pat yourself on the back. But when you were that far outside of the third ATR, maybe you should take some profits. Maybe you should exit your trade because it worked out the way you wanted. Now, if you're trying to do the other way around, either you're trying to go the opposite direction, you can use this for reversals. And you say, hey, maybe price is going to come in and start going the other direction. Same thing here. Maybe for the moment, price is going to come in the other direction. So it just kind of gives you this understanding of context about the bigger picture of what's going on and what you should, be thinking about with that particular price movement. Whether it's for you or against you. If it's a little too extreme, hey, maybe it's a little too far outside of the third ATR and you should give it a minute. It'll start coming back in. Again, whether that is for you or against you. Okay, now let's go and look at the slow stochastic. In the slow stochastic, if we come over here, this is going to be the setup. Basically, it's an oscillator. Tells you if something is overbought, oversold. Now, I only use the slow stochastic, bit of a mouthful there, on the downside. I only use it to help me find the lows and buy the dip. Okay, so while it might be important to know that this thing is overbought, I really find that when the market is up or a stock is up, it can keep going. And so it can stay overbought for quite some time. Usually when something is oversold, lows or bottoms are kind of a moment in time. And so when something comes down, I want to find out, okay, where is that dip that I can buy and how can I find that turnaround? And that is what I'm looking for this oversold. So I want the indicator to be at or below 20, so 20%. Then you have the K period, D period, these little things that make up what the slow stochastic is. You can just look at this, and then you have down here just how you might want to actually color them or trigger them or make them look. So that's really just kind of an appearance situation. So let's dive in here. We can even look at hood to demonstrate this. And remember, the only thing I'm using this for is at the low side. So I really don't care about what's happening up here because you can see it can stay up there for a long time, and then for me it's really not necessarily an exit. I'm really not using this to figure out, oh, I should go short, or oh my gosh, this thing's too high, let me get out, because I mean, just look at this, it can persist for quite some time and it really doesn't help me. Okay, but I'll tell you what it does a really good job of is finding these lows. So look at this, you can see right here, if I get my cursor lined up, when did the slow stochastic come down here and dip to that 20%? Right at the low, wasn't it? Or how about this? How about the next one? There you go. There is also where it dipped below 20%. And right there, that's the low. Now you can also see, yes, it had one just prior to here. But you can also look at, and while it was a low, you can see it did hit a low and bounced. It wasn't the low because it went lower. But you can see that when it was the right moment, price went lower and the stochastic actually went higher. It can just, if my tool can just draw it, you can see it just barely went higher. So you can kind of use this as a divergence tool as well. Okay, and then even when you're in a continuation, this one wasn't as deep, but you can still see that the low spot on the slow stochastic was the low of this particular pullback right there on that move. Okay, I do find the slow stochastic pretty interesting. You can even see here another spot, there was the low, and there was the low of the slow stochastic, and at the end, probably like right there, there was a dip, and you can see right there was another dip, there was another dip, and then even there and there. It does an amazing job as far as finding these lows. So I like it. Now, if you start using this on lower time frames, if you start using it on the 15 or the 5 or something like that, there's going to be, man, it's an oscillator, so it's going to be all over the place, and you're going to have to really drill down. I'm more of a swing trader for my bigger positions, and so when I look at something like this, I like to use the slow stochastic. You can use it on the monthly, the weekly, daily, hourly, but then you start getting down to the 15-minute, it might get a little bit noisy. So just be aware of that if I'm going to be using this for swing trading, I'm going to stick with it for the higher time frames. If you find something else, if you like it the other way around, more power to you. Just figure out how to use this for your benefit. Go back, study it, back test it, and figure out what works best for you. Okay, then let's get into the squeeze. Now, I do have the Squeeze Pro here, but really, for all intents and purposes, the same thing is true for the squeeze. The only difference between the Squeeze Pro and the squeeze are that we have a high, medium, and low compression. So you can see here, I changed my colors too. And if you notice, green for me is going to be low squeeze. Kind of made sense to me. Green, kind of feeling good. Okay, get a little bit of a squeeze. And then the red is a higher squeeze. I'm thinking, okay, I really need to know this. I want it to call attention to me. Okay, we're starting to get a pretty solid squeeze. But then when we get the high compression squeeze, I want it to be just like on fire. And I think, okay, what's the brightest something that I can think of? And for me, the next step was kind of this orangey color. I was like, okay, I really want to see this thing light up for me. And so that was how I went. Basically, gray means there's no squeeze. So, hey, no squeeze, I don't want to see it. And then green, small squeeze, little squeeze. Red, you get medium squeeze, and then orange is the high squeeze, okay? And what this is telling you is it's basically when the Bollinger Bands are inside of the Keltner channels. And look, we already use the Keltner channels, don't we? I use the third ATRs. And so what they're trying to do is tell you that this is basically a period of calm, because what happens is you get contraction, then expansion. You get calm, and then you get crazy. It's like the calm before the storm. And what this is showing you can even see on Hood. Now you can see on my lines here, we were trading this. We were actually trading Robin, which is the leverage ETF of Hood. And you can see right in through this section, price is kind of sideways, isn't it? Well, look at this. We get a squeeze. And in through there, we even get a high compression squeeze. So really, it's telling me something's going to happen. And sure enough, once we finally got back up over these moving averages, boom, we get that big move. And you can see that squeeze really carried Robinhood up higher and really propelled this. And you can even see along the way, there were a couple other squeezes that helped propel this thing up and up and up. And then if we back up a little bit, look at the daily chart, all that stuff. Now this was kind of during the tariff situation, so the market was really down quite a bit. But look at the daily chart. Look at this prolonged squeeze that we got in through here as price was kind of building a box in through here. And look at that squeeze and how it sets up and then it fires. Yeah, look at that incredible move that we had. So the squeeze, the stochastic, and then trying to gauge where you're going to go using the third ATRs. These things all wrap together. They all help me figure out how the market is moving and working. And of course, I have the Moxie Indicator to help me get those real exact pinpoint spots, like that with the trampoline move, all that kind of stuff. That's a video for later. You guys can see there's lots of material out there for the Moxie Indicator. But as far as this kind of stuff, looking around and using these free tools, I love them. Let's take a look at one more, just so we can show this and look at SoFi, because I know that there were a couple examples back in through here. How about this? If we kind of zoom in just before this big move, and what do we got? Look at right here. We got a couple squeezes starting to show up right before price launches, okay? They can be a little bit subtle. Maybe you don't notice them too much, but this is why I have them color-coded. But yeah, look at that squeeze that's showing you. And if we kind of look in here, you want to look where one dip is. There's a good buy the dip right there. You can see the slow stochastic right there. There's the dip right in through there. And then you can see another dip where the slow stochastic came down, and that was exactly the dip right there on that move. Fantastic, really worked. And boy, that was a huge move that kind of set up and through this thing. And then let's see if there's anything else we can kind of look at on the hourly chart. And yeah, you can just see that there are lots of squeezes, but let's see if we can kind of zoom in here and find one here. Bingo, look at that, high compression squeeze. That was the move that set up. There's your Moxie price trigger, there's your squeeze, and in fact, if you really wanted to get the low tick, there's the low tick, and there is your low stochastic. You line all of these things up, and you can see that was the thing that really set it off, because you had this massive high compression squeeze on the hourly chart. Then you had the Moxie Indicator, and boy, this thing fired off, didn't it? Okay, so that's how I incorporate all these things. I've got the Moxie Indicator, I got the ATRs, Keltner Channels, I've got the slow stochastic, and I got the squeeze. And basically, in a nutshell, this is exactly how I trade. I haven't changed my chart in years, and anybody who sees me, watches me, and sees my videos, you guys will see these are the indicators that I have on my charts, and this is how I use them. So I hope you guys found this valuable. Remember, any kind of links that are in the description, that's how you guys can find more information about me. But remember to subscribe, hit that like button, and come back for more videos where you can learn more about how to trade, and I can even give you some freebies out here to help you with your trading. All right, guys, thanks again, and we'll see you later.
Hey, TG here with Simpler Trading. Thanks for watching. If you enjoyed this video, be sure to leave a like or comment below. Also, make sure to subscribe and click that notification bell so you can stay up to date with my market analysis. Or you can join my free newsletter with the link in the description. Good trading, and I'll see you at the next video.